Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, September 13th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses. We do create multiple hypotheses. These are our trade plans. Nobody can tell you what the market's going to do. Therefore, we have multiple plans in place. Two main hypotheses and two alternative hypotheses, sometimes a fifth. And what we're doing is we are plotting a path once we decide or determine who is taking control. So we wait for the market to open up, look for who's taking control, and then execute the plan that best suits the market. And then we adjust to our alternative plans as the market shows us its hand. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So, first of all, it is rollover. So as of today, all my charts are on December. We are rolling over to the Z contract. It's fine that if you want to stay on the September contract, but everything I talk about is going to be on the December contract. There's enough volume and liquidity in the December contract, and I prefer to go with the roll rather than what I used to do is wait until the weekend and do the roll on the weekend. So a lot of people are going to be trading the September contract. A lot of people are going to be trading the December contract, which means there's going to be a lot of gamma hedging and rolls going on for calendar spreads, etc. So your delta is not going to mean much. So for the next 5 days, delta is going to be unavailable for accurate information. Just keep that in mind. So taking a look at yesterday, our main hypothesis was an open auction in range, a push down, and we were looking for buyers to step in down in this trade area here, possibly even a push lower. This was our over underline here. These have been adjusted, of course, to the December contract now. And then we were looking for a rotation up and a break of that week high, which in September contract was 93. In the December contract, it was 98. And we had this news that shot us up, and then we had the news that brought us right back down. This was an anomaly. It really had to be taken out of the equation in terms of what the market was doing. But if you just eliminate this spike, nothing really changed. We continued to drift up. We got the counter rotation. We put in a higher low, and then we continued up. Now, without the spike, we wouldn't have broken that week high. We would have just created a further week high, and we rotated in. So it was this created a little bit of anomaly on the day, which it's the headline news that is moving us. It's not really the economic news that has been moving this market. But for the most part, Hypo 1 was in play all day and didn't really shift to any other hypotheses. Taking a look at the news, we just had, We just had continuous jobless claims came out better than expected. Core CPI came out basically, a little bit less, but right on track. Initial jobless claims were much better than expected. So the market reacted with a spike up to 29.05, which put in our overnight high. And right now we've got ECB press conference going on. I don't know what Draghi is saying right now, but just it's caused a couple flutters here. So just be aware that there's a news event happening right now for probably the next 15, 20 minutes, if not longer. 10 o'clock, we've got Fed Quarles speaking, and then 10:30 we've got natural gas. 11 o'clock Cleveland CPI. 1 o'clock 30-year bond auction, and then we've got Bostic speaking at 1:15. So we've got, and then 2 o'clock, we've got the federal budget balance. So there's going to be some news. We've got rollover, we've got news, we've got headline stuff going on with the NAFTA talks are going on, but yesterday Trudeau said that there was no deal in place yet. Freeland said that she hasn't gone back to Washington yet because the deal is not prepared yet, but you never know if they're going to make some type of announcement on that. Just be aware that there's going to be a lot going on for the next 2 days and through rollover that could complicate and make some out of nowhere moves. And I'm just going to get rid of my delta here because it really doesn't matter. Taking a look at the overnight inventory. The overnight inventory is about 80% net long. We open auction in range. We basically just chopped going sideways in the balance, and then we started grinding up once we got into the European session. And then the news spike was right here, and we spiked up to the 28.05 area, and then we've grinded out. I want to point something out that I've noticed in the last 3 or 4 days is that the FUBAR Mr. Sneakies have, just like any, and this is one of my favorite trade patterns as a reversion to the mean type pattern, but the Mr. Sneakies haven't been really good lately. They've dropped down in their expectancy, and they're acting more like a flag with continuation than a reversion back to the 9 EMA. Just keep that in mind. You're getting some reversion, but it's happening after a continuation. So it's we just have to be aware that when trade setups start to not work in the environment, or because of the environment, you've gotta tighten up. It doesn't mean that you don't take them; it just means that you be more cautious and don't get stubborn on them, or take them with a smaller size. So we just put in a 1 tick push higher into the 29.05 and a quarter, and now we're coming back to the 9 EMA. So depending on where your stop was, this still would have been funded by now, but again, you had to take a little bit of heat on it. Trend type scenario in the Globex. The volume's not going to mean much in the December contract, simply because of the fact that most people are still going to be trading the September contract. Taking a look at the macro. Each morning I like to start my day with a simple candlestick chart and a 9 EMA, 20 SMA. What I'm doing is I'm looking to see where we are within the trend in the larger time frame, and then I work my way down into the smaller time frames. So you can see we have this beautiful trend up, one time framing up for 14 months. February, we violated it. It looked like they were seeing some weakness, but they never closed below the 9 EMA, and then we get this continuation pattern, and this trend is still very much intact. On the bigger picture, I keep talking about this, we can come down to the 27.74 and a quarter in the December contract and still not violate this trend on the monthly. Going to the weekly, beautiful trend up, and then it looked like it was going to roll over, and then they took it back, and then we rolled over, but they put in a higher low, and then they took it back. And since then, we've gone back into trend mode, and we've got good slope, good separation, and prices paralleling the 9 nicely. A move back on the weekly to the 28.60 1/4 would start to challenge the trend but not violate it. So a pullback down there is still a natural part of the upward trend on the weekly. On the daily, we looked like we were starting to one time frame down, and then we violated that one time framing on the 9th, and now we're starting to move back up and get back into a possible continuation pattern. I'm getting to see some slope again. I don't have a lot of separation, but we're holding the 9 EMA after coming down and testing the 20. A push back to the 28.92 1/4 area would challenge the trend but not violate it. We don't violate this trend on the daily until we get below the 28.85.50. Going into the intraday, basically we've been in a sideways consolidation, and now we're getting continuation. And we're into the 2900s. I know it's on the December contract, the September contract. The spread right now on the ES is +5. On the NASDAQ, it's +28. On the Russell, it's +5, and on the Dow, it's 22. So right now we're trading 28.98 1/4 on the September contract, and I expect that September contract is going to go and test into the 2900s. If it does that with the 5-point spread, that puts us up into the 29.05 again, and I'm looking for continuation up. So taking a look at the structure of the market, you can see that we've been in, we broke out of this balance down here, and we pushed up into new all-time highs. The adjusted all-time high in the December contract is 29.2250. It is a valid all-time high put into the RTH. There's no unadjusted all-time highs right now, although you will see a pattern of testing an old all-time high in the previous contract, which is in 29.1750. We have balanced out, and we've accepted value now at the 28.94, and we've come up and we had a 5-day or 6-day micro composite, whether you put the holiday in or not. That VPOC, micro composite VPOC, was at 29.02, and we're trading above that right now. That is going to be important for us to hold. I mean, 2,900, obviously. The key line in the sand today is going to be down here at the 28.9850. We get below that, that puts us into yesterday's range and inside of a possible move back down into the 28.94, back into balance. Below the 91, it gets pretty sketchy, and we could see a rotation all the way back down to the 84. But for the most part, unless we get some news, I'm expecting the continuation up towards the 29.11 1/4. Our week high, the high for the week is the high we just put in, 29.05 1/4. And we have to see if we can get above that to get the continuation to go make the move up into the next resistance level, which is going to be in around the 29.11. Our month high is up at the 29. Is it up? Hold on a second. I just got to check this out. I think with the data roll, I just have to verify some numbers here. The month high is 1750. Okay, and then the all-time high is 22. Okay, I was right. So get a move up into the 12. That's going to be resistance above the 12. We're looking at that 1750. That's the September all-time high. And then if we can come up and accept that, a push up into the all-time high 22 and new all-time highs. So in terms of hypothesis for the day, it's going to be bumpy. It's always coming into rollover. It's always, you're going to get these moves of 3, 4, 5 points out of nowhere. So do not trade without a stop today. It's just too dangerous. It's way too dangerous. So our overnight high is up at 29.05 and a quarter. We went up and we one-ticked the high that was put on the news. We've got a naked close here at 29.0350. We are going to open up outside of range, so we are going to have a gap open. There is a naked VPOC down here at 2950 with the microcomposite VPOC. So I'm looking in terms of the open. I'm looking for an open auction out of range. I'm looking for responsive selling, and I think we'll probably take out the overnight high and we'll get a open auction out of range. But then I'm looking for responsive selling to come back down and test the 2900, the prior day range, and close this naked VPOC. But before we get there, again, this is a trend type scenario in the Globex, and key levels we have to pay attention to. Our overnight low is at 89.75. Our VPOC could shift, but right now it is down at the 92. I'd be looking for it to shift up here at some point in time, but if it doesn't shift, that's a bit of a clue we want to pay attention to. So right now I have to put it at 92 and a quarter. And there's really not a lot of information. Multiple distributions. Key LVN right now is going to be the 0250, but I would be really watching the 0175. That's the microcomposite VPOC that runs from 824 to 994. And we're back inside of that microcomposite, and whether or not they come down below it to take out this naked VPOC. Our 20-day ATR, 20-period daily ATR, average true range full session, is running at 21.49. So off of the overnight low, our daily upside target is up here in the 29.11 and a quarter. Off of the overnight high that was just put in, I've got to adjust this, minus the 20-day. So our downside daily ATR gets adjusted to 83.75. Is that correct? That can't be right. 29.05 and a quarter minus the 21.49. Come on, calculator. 29.05 and a quarter minus 21.49. Yeah, 28.83.75. So that's correct. Our week open for this week is 28.78.75. So with 2 sessions left to go, our weekly critical mass, okay, is up here in the 21.75, which is right near that all-time high. Our weekly ATR is running at 52.47. So off of the weekly low, which was at 28.72 and a quarter, our weekly ATR is up here at 29.24.75. Why is this important? It's important because of the fact that we have range capabilities still this week without expanding the range to put in new all-time highs. So if they can hold in the 2900s today and tomorrow, I'm looking for new all-time highs coming into this weekend. The only thing that kind of puts a monkey wrench into it is the fact that we've got rollover. But generally, with a spread to the upside, the move is generally up rather than down historically. So in terms of hypothesis, they're going to be very similar to what they were yesterday in terms of hypos. We're going to open auction out of range. I'm looking for an open auction out of range, possibly take out the overnight high in the process, but I'm looking for a responsive selling to come down into the 2900, test the range high, possibly push down into the 2898 to 2895, even a possible dip, because we're going to have some wide rotation, so I have to plan on the possibility. And if this overnight VPOC doesn't hold or doesn't shift up before the open, then and we get inside a value area from yesterday, then I'd be looking for even a possible push down into the naked overnight VPOC. But somewhere in this area, either between 95 and 90 or a little bit higher, okay, 2900 to 2895. And I know these are big ranges, but these are the areas I'm going to be paying very close attention to my stock zones. And there should be a stock zone right here at 02 and a quarter. I'm going to be paying very close attention to these stock zones in terms of how the auction handles these, and I'm going to be keeping it tight and light on my trades this morning until we get clear indication of who's taking control. But again, I want people to be prepared that a move down into the 95 to 90 area is not going to negate, okay, a positive, hypotheses. But I'm looking for responsive buyers down here, and then I'm looking for us to rotate up. And the target is 2907 on the on hypo 1, and that is my my main hypothesis. My secondary hypothesis, hypo 2, is open auction out of range, a push up into the 2905 and a quarter overnight high, and a move up into the 2907, but seeing responsive selling coming in up here and then rotating us down into the 2900, chopping between 2900 and 2898, and then failing and pushing down into this level, chopping in this area and taking a trip through value to take out and test the overnight low and come down here to the 8850, start basing and come up and close somewhere in this 90 to 95 area. That is hypo 2. Hypo 3 is a gap and go, open test drive or open drive, failure to close the gap. Initiative buyers take control and push us up into the 2910, 2911, chop in this area and maybe get a late day probe up into the 2913.50. Not expecting a real big range today, although it could happen, and we'll talk about that in the aspect of if we get above the daily ATR and accept this 13 area, we could see a push up into the month high and that previous September all-time high up at the 1750. Hypo 4 is an open auction out of range. Failure to take out the 2907, sellers take control early, move us back down into the value area, chop inside the value area, and basically go sideways with a late day probe down into the 2883. And this is not a over underline. This needed to be adjusted. So those are my four main hypotheses. There is a fifth hypothesis, which is a open auction out of range and a small 10-point range where we just go sideways and fight the range high from the prior day and just get a 10 to 12 point range that just chops and keeps fighting the range high, but failing to make any push above the 2908 and a quarter. Those are my hypothesis. Taking a look at gold, gold is starting to make its move back up. We broke through that level I was talking about yesterday. We talked about The key on what the next the next move, the next rotation is going to be outside of this balance. I said it would be either at the 14 level or at the 89 level. We're above the 14 level, and we're pushing up, and I'm looking for this to come up today into the 1220.40 to test that. If we can accept that, that's this prior microcomposite right here and the microcomposite VPOC. And I'm looking for a push to 25 and then failure of 25 coming down and chopping in this area. If we do get above 25, we could see a quick push up into the 33. The average larger time frame rotation is between 38 and 43. We're only 24 into it. So we do have capabilities to continue to push this higher. All right, that's going to complete my pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.